Hello everyone and welcome to The Weight of Freight, where we explore the intricate yet powerful connections between the freight and commodities markets. My name is Younevitch and I'm the Global Head of Freight at Argus Media. And just a quick reminder that subscribers of Argus Freight can use the limited edition link on the podcast page to download exclusive content related to the topics that we'll discuss right here. And today we'll be covering the thorny path of shipping going green, focusing on the tanker market. And we'll do it in the context of the current market fundamentals and geopolitical environment, of course. And I'm very pleased to welcome a special guest, Andrea Olivi, who is the Global Head of Wet Freight and Oil Chartering at Trafigura. Andrea, it's a pleasure to have you here.
Hi, thank you very much. It's a pleasure for me.
Well, let's dive right in then, shall we? I guess, it won't be a shocking statement to say that we live in interesting times. And I think you and I talked about it before, that it would be nice to just, be bored just even for a little while. But alas, there is a military conflict in Europe, then what many call a global energy crisis and possibly a looming recession. So my first question to you, with all of that happening, do you feel like the whole decarbonization discussion in shipping has lost its importance, at least in the minds of the market players?
Thank you. This is a very good question. A lot of people think that decarbonization is losing momentum due to current geopolitical events. But actually, I had the pleasure to participate at the Global Maritime Forum in New York last week. And to be fair, I found a group of industry players that want to bring the agenda forward and are determined to decarbonize from today. I was positively surprised by the fact that there is also a clear focus on developing short-term measures that, once again, can work from today. Mm-hmm. It is believed that there is some 25% optimization that could be achieved in global shipping by short-term measures. This is a big number, but we can achieve it by improving our data, sharing it, and also changing some of the architecture of our shipping contracts and work towards splitting incentives across the various players. I also listened to the Deputy Director for Climate and Environment at the White House, Jane Lubchenco, announcing that Presidential Climate Envoy John Kerry's Green Shipping Challenge will be one of the U.S. government's key initiatives at COP27 conference in November. So I think this is a pretty strong signal.
Okay. So before we maybe dive more into the details of how the green transition could realistically happen, let's maybe talk about the impact of carbon on freight, because that's an important factor to consider when we talk about its importance. So I'm just looking at our Argus Carbon Cost of Freight Index, or CCF, for WTI coming to Europe right now. And its peak in the last 3 months has been just around maybe $0.4 per barrel for that particular crude grade. And now it's around maybe 0.25. And this is in the environment where WTI freight to Europe is over $5 per barrel. And the price for WTI itself is around $85 per barrel. So one could argue that it's a relatively small cost. So why do you think should people in the oil market care about it, apart from obviously environmental concerns?
Well, so the irony in all of this is that I think it's fair to say that so far decarbonization and carbon prices have had very little impact to spot freight rates. Mm-hmm. We are yet to see market participants willing to pay a premium for vessels with a lower carbon footprint in the spot market, but we should not be discouraged, right? From an asset point of view, there is an argument that decarbonization is affecting the decision-making of many industry players and pushing premiums for eco-tonnage higher. Mm-hmm. At the same time, we're seeing more and more traditional owners divesting from older assets and others investing in energy-saving devices. Over the coming years, we will see new regulations that should help decarbonization have a much stronger effect on spot rates. But again, few will be a game changer in the very immediate term. First of all, we will have EEXI regulations kicking in from 1st January 2023. EEXI is a design-based measure that will enforce a one-time certification of practically all vessels in service. Now, in tankers, I think the effect will not be so pronounced as it will affect maximum speeds rather than operating speeds.
Right.
And we know that the majority of the tanker industry is operating at well below maximum speeds. Then you have the CII scores, the carbon intensity scores, that will require all vessels in service to essentially report their actual fuel consumption and thus greenhouse gas emissions on an annual basis. The goal here is to ensure that all vessels reduce their carbon footprint from one year to the next. The issue here, in my opinion, is that it is calculated using AER, which is an annual efficiency ratio, which is a metric which ends up favoring long ballast legs, which, if you think about it, is counterintuitive. A much better metric would be to use the so-called EEOI, which is also the metric used by Sea Cargo Charter. When talking to the majority of industry players, the consensus seems to be that the CII framework is currently too complicated and it should be simplified by reducing exceptions and special cases. The other issue that...
Sorry, just on the CII, I think it's worth maybe explaining this a little, because when we're talking about long ballast lag and why it's a problem, basically the argument there is, as I understand, is that it encourages potentially less eco-efficient vessels to go on longer distances, right?
Correct.
So that means that you end up emitting more, while like if you do it on a shorter voyage, because this distance is a factor, and you spend some time in port, you might actually be charged more, right?
And there's another huge issue, right? The other issue is that there are no enforcement rules nor penalties for non-compliant vessels until 2026. So I'm a bit skeptical that CII scores can have a meaningful short-term impact. Another major point of discussion would be how to split incentives between owners and charters around vessels and cargoes that can help owners optimize their CII score. Here we hope to partner with as many owners as possible, taking on their tonnage to improve their efficiency scores by leveraging our almost 7.5 million barrels a day of physical trade flows.
When you say partnering up, so what's the view here? It's like taking their vessels on a longer time charter, putting them on COAs, and saying we'll give more business to more eco-efficient fleets.
Correct, exactly. It's utilizing our cargo program to help owners reduce their CII score.
Okay, and how does it mean that you will have to new terms in the contracts, new clauses, particular reflecting the CII score or reflecting the consumption or emissions of the vessels? How would you handle this transactionally? And if that's the case, how would the rest of the market, or do you think the rest of the market would want to follow?
I think actually the clauses that you're referring to are currently being negotiated and discussed, and there is no final clause yet. So we are probably waiting for some guidance on this one.
Okay, and what about the rest of the market? Because notoriously a lot of the let's say opinions out there, and I hear it from ship owners, actually heard it from engine makers as well, is that the challenge of the tanker market is that it's a very different market from something like containers, for instance, where the customers are quite, let's say, first of all, environmentally conscious, and the movers are actually quite close to the customer, while the oil producers are quite removed from the end customer. So there is potentially less push from their customers and less incentive for them to really, gun for decarbonization and really follow, let's say, in the first steps, in the first wave, or trying to go green, while you can get away with potentially cheaper costs. Do you agree with that, or do you think that the in the tanker market, the oil market, are ready to, take steps forward in the decarbonization and follow, for instance, your example of running with more efficient fleets?
I think, look, I think the market, I mean, certain there's a large number of participants that want to do more. But I think, and now you kind of, I want to introduce the next measure that I was going to talk to you about, which is the EU ETS scheme, which is the one I like the most. And I think it's the one that will be the most meaningful and impactful. Which, should come into force in either 2023, although we also hear anecdotal evidence that it could delay into 2024. The reason why we like the EU ETS scheme is because it finally puts a price on carbon. The EU ETS scheme should add inflationary pressure on EU-bound voyages, and all other things being equal, we should also see eco-tonnage and vessels with lower carbon footprints to be favored by charters operating vessels and voyages in the EU. Again, as I said before, the reason we like this scheme is because it finally puts a price on carbon, which is what the industry needs to align environmental and financial interests. Hopefully, the EU ETS scheme will prepare the way for the IMO to introduce a global carbon tax, perhaps already from 2027 onwards. We know that within the IMO, the momentum is building for a global carbon tax. One major point of discussion will be how the industry treats and settles EUA cost for spot voyages. If you look at current FFA index curves, they do not make a provision for EU ETS, and most industry players we speak to seem to agree that this cost will be treated as a separate CP item falling outside Worldscale rates, much like it happens today with additional war risk premiums.
Right. So this would be handled in the final invoice for the voyage, pretty much.
Correct.
So if we're talking about how the carbon should be included globally, how is that going to be regulated, right? How is that going to be enforced? Are we talking primarily here that the market has to regulate itself by obviously, again, encouraging going for like working with the specific ship owners or going for particular voyages and stuff like that, and making sure that the vessels which are there, or like the ship owners which are there to try and go green first, are positively compensated? Or are we talking about reliance on the regulation from the government? And how, if the latter, how is that going to be enforced, or could be perfectly enforced, or like better?
I think it's absolutely vital that regulators play their role, and for me, the IMO is really the organization that should step up in this specific area or segment.
Okay, but realistically, is there, you think, especially considering how much you guys are looking into it, is there a potentially good framework for this, which could actually work? Because one of the main criticisms generally that people throw out there when it comes to either carbon decarbonization measure is that it generally looks good on paper, but when it comes to practical enforcement of any of those rules, usually there are particular caveats. So if we talk about global carbon tax, is there, you think, a good regulatory framework which could work as far as you're concerned, or it will have to start with the market self-regulating itself?
No, I think, look, it should be enforced by regulators, and again, here the IMO is the one body that has the ability to enforce it, much like it has enforced the transition from high sulfur to low sulfur fuels.
Let's just talk then particular efforts of Trafigura in decarbonization. Obviously, you've been vocal supporters of decarbonization in the industry. So, what do you consider to be your most promising moves, or like general moves in the market that you think are gonna bring the shipping closer to the decarbonization, and how your own efforts are helping that?
Okay, so I guess it's fair to say we remain very active in this front. We try to focus on actions rather than words as much as possible. I think when it comes to decarbonization, it is often easy to fall into what I like to call the green talk trap. We have so far dedicated a lot of human and capital resources towards decarbonization. We're investing in specialized stuff, better software, energy-saving devices, and new databases. Over the last quarters, we have been active in adding dual-fuel methanol and dual-fuel LPG vessels to our fleet. This will help us understand whether methanol and LPG have a role to play to support shipping decarbonization in the short, medium, and long term. Amongst the energy-saving devices available in the market, we have retrofitted some of these on our owned vessels. Wake equalizing ducts, advanced silicon-based hull coatings, as well as ultrasonic anti-fouling systems. Furthermore, we have invested into real-time CO2 monitoring devices and are currently evaluating several telemetry systems which should enable us to improve performance monitoring on our vessels. I strongly believe in the let's say data revolution that is about to hit shipping. We must work towards having a more real-time, accurate and transparent data from vessels to be able to take better decisions. Without proper data, I don't feel confident we will succeed. This year, we have also been able to reduce our CO2 footprint by about 9%, thanks to operational and technical efficiencies, ranging from speed adjustment, weather routing optimization, propeller polishing, and underwater cleaning, and so on. Personally, I think there is more that we may be able to achieve if we had better data from our vessels. Incredibly enough, there is still a large part of owners who have sensors on board of their vessels, but are not willing to share data with us. Hopefully, that can change in the future, and I'm fairly confident it will. One example I always like to give is what happened on one of our long-term VLCC charters, where one of our close owners called us just prior to the vessel dry docking and asked whether we had an interest in retrofitting an energy-saving device on the vessel and split the costs and benefits from the device 50-50. That is just a beautiful example of how things should work. The owner went ahead with the investment, which improved the speed and consumption, and we agreed to increase TC higher accordingly. Decarbonization should be about splitting costs and incentives between parties. We cannot expect only one party to bear all the costs. And this is why we're often happy to share our decarbonization strategy so openly, despite the amount of investment that we've made and despite the risk of perhaps losing what we could describe as a first mover advantage. We want to be pioneers in decarbonization, and we've made it very clear that we intend to pursue decarbonization as both an ethical and environmental cause, but also as a competitive advantage. Ultimately, if we were to ignore decarbonization, we would be making pretty much the same mistake Blockbuster made when they ignored the live streaming industry.
Fair enough. A quick question on the dual fuel engine, since you mentioned it, because we heard it both from, again, engine makers and some ship owners as well, and general opinions in the market, that while there is quite a few people going for dual fueled engines, a lot of the time, even when they do have those engines installed, first of all, they always go for the conventional fuel part anyway. And as far as we've heard, some who order again, either the new buildings or retrofits with dual fuel, have very little intention, at least for now, to try the unconventional, like the greener fuels in it. So a lot of that, as you mentioned before, is a green talk, for some of the people at least. Do you think that is gonna quickly change? Does the industry have to wait for the marine fuel prices for, let's say, greener fuels like methanol or again biofuels and so on to go closer to par with something like VLSFO?
Well, I think we have to create the incentives for those owners who have got the courage, to retrofit vessels or build vessels with dual fuel engine. We need to make it possible for them to be able to subsidize, let's say, those green fuel and make them as competitive as fossil fuels. That is key, and this is why I think we absolutely need a price on carbon.
An actual real dollar exposure, in other words.
Correct. Absolutely. I think it's vital.
Okay, fair enough. All right, let's roll it back to the freight market for a second, and the tanker market in particular. We have quite a curious situation here, where there is, an obvious strength on particular trades and vessel classes, it seems. For example, Aframaxes have been very strong and enjoyed quite a boost in ton miles in recent months, while some other vessel classes didn't fare so well. At the same time, we have some volatility in TC rates, obviously, as you know, volatility in bunker fuels, and all of those changes in the flows of the crude around the world as geopolitics develop. So I was wondering your take, if we step back from carbon for a sec, where is this? All of this is going. What's your projection on where the crude rate is going to go? Let's say in the next quarter, next half a year.
Well, yes. I mean, the outlook at the moment is hugely dominated by the impact of the Russian-Ukraine conflict. The EU import ban and potential price cap will both dictate a large part of global tanker flows, and more likely than not towards hugely inefficient routes, which will dramatically increase net tanker demand. The supply-demand outlook is obviously very favorable since these new developments, and have brought forward what we have long considered to be very positive fundamentals by a couple of years, likely bridging the gap until 2023, end 2023, where stronger fundamentals come into play regardless of new trade flows. We remain constructive on the market, but we are well aware of the growing downside risks at the moment. As freight rates keep rising almost every day, it becomes more and more vertiginous to look down at the potential floor if current freight dynamics were to reverse. It's a long way down from the current $75,000 or $80,000 a day on a VLCC down to the $0,000 a day we had just a few months ago.
Yeah.
You can see this quite clearly, by the way, in the FFA market, where many curves are heavily backwards over 2023, as we aren't seeing the kind of optimism necessary for speculative players to see curves in contango, despite an arguably favorable supply and S&D. As a result, taking on new physical exposure is extremely costly and risky right now, and whilst we have been known to be takers of large amount of tonnage in the past, we will be a lot more selective in our deals in the coming months. We will keep working with our closest owners, whom we have supported in providing fixed cover during the hard, let's say, post-COVID times, and who now support us in turn with managing our huge internal program for our physical traders. In a rising interest rates environment, working with first-class counterparties is absolutely key.
Okay.
Talking from a more long-term point of view, then the tanker order book is smiling at owners today, let's say, because it's very small. But we also hear anecdotal evidence of yards becoming increasingly focused and keen on booking tanker orders, as well as potentially converting container slots into tankers. It is no secret that new building prices have started to correct downwards, and 2025 could be a year of big tanker deliveries. And another factor to bear in mind when making long-term decisions.
Okay, and in terms, if we just go back to short term for a second, do I get the feeling that there is a growing, let's say, concern in the market? Then, from your words and from what I hear, is that the foundations on which the current strength in some of the tanker markets is quite, let's say, shaky, or maybe a little inflated. Yeah, and that potentially by let's say by the end of this year there might be quite a correction downwards. Is that?
I think I think there is always that risk. I think the market at the moment is inflated by what is happening around the Russian-Ukraine conflict. So we really need to understand what will happen there before we really answer, let's say, your question. One thing is for sure is that the global tanker industry right now is really being shocked by a shift, let's say, to a bipolar world. Let's say, as the EU, UK, and US impose stricter sanctions on Russia, a growing portion of the global oil trade is being pushed into a parallel, less regulated segment of the tanker industry. When it was just Venezuela and Iran, we could call it a shadow trade, as it represented just a few percentage of global trade. But now, if you include Russia, outside of EU, UK, US insurance and financing scheme, we'll see more than 10 million barrels a day of global crude products trade being entirely managed by, let's say, shadowy vessels. It's a full-blown parallel tanker industry, which, to be honest, it's not far from the size of the global industry back in the 80s.
Yeah, and it will distort, right? It will distort the general market, wouldn't it? If you have,
correct. Yeah. Absolutely. And the other issue is that we're lacking the regulations this industry, it's lacking the regulations that make modern shipping so much safer than it was in the past.
And I guess it's interesting in those times where you have a stronger freight market in general, and then potentially soon a distorted freight market when there is a lot of shadow trade, as we called it, that people also have to look into their carbon cost exposure. So I guess the argument, which getting more often repeated now, is that if you can get at least this part to be transparent, the carbon cost when you look forward, it's going to help you in this particular, let's say, shady times when certain things are uncertain when it comes to your freight cost exposure. Do you agree with that it's a valid argument right now?
Yeah, I think it's a valid argument. I think carbon prices will become increasingly more important for freight. We will see this the moment the EU ETS scheme will kick in, and then it will become absolutely vital when hopefully we will have a global tax on carbon in 2027, 2030. We will see when that happens.
Sounds good. Well, thank you very much, Andrea. I think we're out of time here, but it's a pleasure as always to get your expert views on things.
Thank you very much.
And thanks everyone for listening. If you would like to get access to some amazing combo of freight data analytics for Crude, please refer to August Tanker Freight Service, and we shall leave the link in the description. Otherwise, have a great day and see you next time.